In 2017, Western Union was caught in one of the biggest corporate scandals you've never heard about. They were charged with willfully failing to stop international fraud that stole millions from innocent victims across America. Imagine sending money to help a family member in trouble, only to discover it was all a lie. Your hard-earned cash, gone forever. And Western Union knew this was happening for years. What if I told you the company actually made more money by looking the other way? That some employees even helped criminals get away with it? The details of what Western Union did and didn't do will shock you. How did this massive fraud operation continue for so long? What finally brought them down? And most importantly, could you be at risk right now without even knowing it? Stay tuned as we uncover what really happened, the devastating consequences, and the critical lessons we all need to learn before sending our next money transfer. What happened at Western Union? For years, Western Union allowed criminals to use their global money transfer system to steal millions from unsuspecting victims. The fraud was shockingly simple, yet devastatingly effective. Here's how it worked. Scammers would contact victims claiming they'd won lotteries, offering fake loans, or even pretending to be relatives in emergencies. They'd convince victims to wire money through Western Union for these opportunities or emergencies. Once sent, the money would be picked up by fraudsters at Western Union locations, where complicit agents helped facilitate the scams. The most disturbing part, Western Union knew this was happening. Between 2004 and 2012, the company identified over $500 million in reported consumer fraud, but that was just the tip of the iceberg. Internal reports showed the actual fraud total was much higher, as most victims never reported being scammed. But why would a legitimate business allow this to continue? The answer is simple: profit. Western Union earned fees on every transaction, including fraudulent ones. They collected revenue on each fraudulent transfer certain agent locations processed, creating a perverse incentive to look the other way. Take UK Western Union Agent 2 in London. Despite being identified in over 73 fraud reports and processing millions in suspicious transfers, Western Union kept them operating. When compliance officers recommended shutting them down, sales executives pushed back, arguing they couldn't afford to lose such a high-performing agent. The same pattern played out worldwide. In Spain, fraud activity increased eightfold in just 2 years. In Mexico, agents helped launder fraud proceeds through complex transaction schemes. In Philadelphia, an agent location structured $21 million in suspicious transactions while filing false information. What makes this a crime? Western Union violated 2 serious federal laws. 1. They willfully failed to implement an effective anti-money laundering program as required by the Bank Secrecy Act, allowing criminals to structure transactions to avoid detection. 2. They aided and abetted wire fraud by keeping agents open that they knew were facilitating fraud schemes. Perhaps most shocking was how many Western Union employees tried to stop this. Compliance staff repeatedly identified suspicious agents and recommended terminations. They proposed global guidelines for disciplining high-fraud locations. They created anti-fraud programs. Yet time after time, these efforts were blocked or watered down. Sales executives fought to protect high-volume agents regardless of their fraud rates. High-level executives pressed compliance to make exceptions for agents generating significant revenue. The truth only came to light when federal investigators uncovered the extent of Western Union's complicity through years of detailed investigation. But how did they finally crack the case? And what happened to the victims who lost their life savings to these scams? The consequences would eventually reach the highest levels of the company and lead to one of the largest corporate penalties in U.S. history. Western Union in 2017 got a jaw-dropping $586 million penalty, one of the largest corporate fines in U.S. history. But that's just the beginning. This wasn't just a slap on the wrist. The company had to admit to criminal wrongdoing by signing a deferred prosecution agreement, essentially confessing they aided wire fraud and violated anti-money laundering laws. The real shock? Not a single Western Union executive went to jail. Yet dozens of local agent owners and employees faced criminal charges, including the UK agents who had processed thousands of fraudulent transfers. But here's the twist that affects millions of customers today. Western Union was forced to completely overhaul its global compliance system under strict government supervision for 3 years. Think this story is over. The settlement actually created a victim compensation fund, but most victims never saw their money again. Why? And could this happen again with today's money transfer apps? So what can we actually learn from Western Union's $586 million mistake? The lessons here aren't just for big corporations. They might save you from becoming the next victim. First, the most shocking lesson: even trusted financial institutions might prioritize profits over protecting you. Western Union knew about the fraud for years, but kept the money flowing. This wasn't a few rogue employees. It was systematic failure by design. Think about where you send your money today. Are today's popular payment apps any different? Many operate with even less oversight than Western Union did. The second lesson is about the warning signs that should have raised red flags. Any request to wire money for an emergency, prize, or online purchase should immediately make you suspicious, especially if they push you to keep it secret. But here's the question: would you recognize today's scams that have evolved since then? Perhaps the most powerful lesson is about corporate culture. Western Union had compliance officers who tried to stop the fraud, but sales executives consistently overruled them. The company created a system where short-term profits trumped ethics. Ask yourself, have you ever looked the other way when something didn't feel right because confronting it seemed too difficult? What's truly frightening is how little has changed. While Western Union implemented stronger anti-fraud measures, fraudsters simply evolved. Today, scammers use cryptocurrency, payment apps, and sophisticated social engineering to separate you from your money. So what can you personally do to protect yourself? Always verify requests for money independently, even if they seem to come from family. Never wire money to someone you haven't met in person. And remember, legitimate businesses won't ask for payment through money transfers. The final lesson is perhaps the most sobering. Regulation alone won't protect us. Western Union was already heavily regulated when this happened. True protection requires vigilance from companies, regulators, and most importantly, from each of us. What other financial institutions might be turning a blind eye to fraud happening right now? And how can you make sure you're not their next victim? That brings us at the end of the episode of today. Hope you took a lot from this case, and it helped you understand how financial crimes happen and how to avoid them, because learning from someone else's mistakes is a lot cheaper than making your own. Hit subscribe, tap that notification bell, and leave a comment below telling us which financial crime case you want us to break down next. Because remember, in the world of financial crime, what you don't know can hurt you. Stay safe, stay informed, and we'll see you in the next video.